this is Justin Roberti. I am a writer and producer and reporter for Benzinga and among a number of other places as well. Welcome to TokenizeThis. Thank you so much for following us throughout the day. We are doing a panel on the tokenization of real estate as a way forward for the advancement of real estate in Web3. I'm going to go ahead and hand it over to our guests very quickly and allow them to quickly introduce themselves and tell us just a little bit about what they do. Ed, why don't we go ahead and start off with you? Good to have you, Ed.
Thank you, Justin. Appreciate it. I'm Ed Nwokedi. I'm the founder and CEO of RedSwan CRE. We are a marketplace and platform of digital assets of commercial real estate. We simplify the process of buying commercial real estate.
Fantastic. Going over to you, Samuel.
I'm the president of the Ed fan club. No, I'm just kidding. I, amongst many things, I'm the managing director, real estate services for Inveniam. We're in a data operating system platform. Basically, we make sure that the data is accurate, verified, and anchored to the blockchain.
Very good. Excellent. Going to take it over to you, Remy.
Hi, I'm Remy Jacobson, CEO and founder of RealT. We are the largest real estate tokenization platform integrated in DeFi with over 1,700 units tokenized as of today. Lending platform, secondary market, and been in the business since 2019.
Wow. Okay. 1,700 units. That's great. And Matt, we're going to take it over to you. Just go ahead and tell us a little bit about yourself.
Sure. Matt Andelman here, CEO and founder of ABC FinTech. And we started ABC Tokens, which is essentially a private tokenized commercial real estate fund. So ownership shares, live in the form of a digital token on blockchain and represent fractional ownership of all of the portfolio of properties.
Fantastic. So, for a while now, real estate has been pointed to as a great opportunity for tokenization. Truthfully, I've been reading white papers and working on white papers for probably going on 10 years that have to do with this exact kind of product. I know we've made some progress over the past 5 years or so. What advancements, where are we right now? Are we opening up? I'll take this question over to you, Ed. Are we opening up real estate markets or these kind of investment markets to a wider range of investors by fractionalizing investments like this through tokenization? Or what kind of opportunities is it creating that weren't there before?
It's creating a significant opportunity for investors who typically are not able to buy high quality real estate. My background for the past 20 years has been in commercial real estate. I used to be the executive director for capital markets with Cushman & Wakefield. And at that time, most of my clients were all institutional clients. The average ticket size, $2 million and above to participate in those type of deals. But now with tokenization, we're actually bringing that price point all the way down to $1,000. And even in the foreign markets, as little as $100. So everyone can really get involved in the high quality real estate, not the core plus type of assets that most people are going after. And so, I think it's opening up the market quite a bit for U.S. accredited investors and especially for foreign Reg S investors who really have no access to or very limited access to the kind of quality real estate that we're bringing to the marketplace.
So that's been kind of the hue and cry of tokenization for a number of years. Samuel, I'm going to take it over to you. I don't know if you prefer Sam. Do you prefer Sam or Samuel?
Unless you're my mother, yes, I prefer Sam.
Unless you get out of line, then we'd switch to Samuel, right?
That's right.
So as Ed pointed out, of course, it is an important thing to note that we're opening up markets to international audience. I can see how that would clearly work out. But at the same time, even with, if you talk to people who are working at family offices, but even not as high net worth investors, there are a lot of people adopting institutional style investment now where they've got a certain percent of their portfolio that's going toward capital investments or pre-IPO or crypto. Is this creating another opportunity for those people who are for that kind of investor? Is that the kind of person that we're talking about who maybe on a global basis at least didn't have didn't have access to these kinds of investments and does now in a more meaningful way. Is that kind of what this shift is, as well as adding liquidity to the market?
Well, first, I'd like to address you use the C word, which I think it's very important to differentiate that what we're talking about here is the tokenization of assets that has nothing to do with crypto. Having said that, we all thank the crypto world for providing the platform and providing the audience and really proving that these transactions can occur on chain by the touch of a button. Now, the reason I make that differentiation is because what we're talking about here is truly the bond of a portfolio. Ed and I were talking about this last week on a call. And, you know, when you mention family offices, absolutely. Like this is with RedSwan right now, you can, you know, you'll be able to invest in a diversified core asset portfolio, right? So to me, it's better than a bond, right? Because, you know, even as high as bonds are these days, right? You know, 4 or 5%, but it's that 6% with a kicker, right? With upside potential. So to me, family offices, absolutely. Institutions, absolutely. This is a big audience, but sort of off the topic, but to get back to your answer, yes, this opens up the markets for many people. It's bringing quality, verified investors, accredited investors to developers. At the same time, developers, owner operators, whatever you want to call them, are opening, you know, their assets up to people who didn't have access to them before. You live in Boise, Idaho, you can invest in a Manhattan skyscraper, or vice versa. So the deal flow, in theory, should be much larger, and the educated investor should have better choices and easier access to not only assets, but assets with true, verified, accurate, trustworthy documentation and data.
Mm-hmm. Well, it's interesting, and I'm glad that's the C word you were talking about. I had to think back over my statement. But yeah, though that I see what you're saying. But obviously, tokenization and the fractionalization of fundraising or collective investing, however you want to put it, has been, you know, obviously tremendous advancement of the past 10 years or so, depending on where you want to put it, maybe longer. But, you know, right now, Remy, obviously things have been a little bit tough. Now we've got this, we've got a terrible situation going on in Gaza Strip, for example, right now. You've got black swan events like, you know, Ukraine being attacked by Russia, for example. We've had global supply issues. We've had global liquidity issues. So we can talk about what kind of opportunities, as I was just a minute ago with Sam, talk about what kind of opportunities this is for investors. But what about those who are on the sell side? Are we, you know, this would be a good time to have a little bit of good news for people who are looking to develop, for example. Are we creating opportunities with this kind of approach?
Well, let me go a little bit back to the first question that was asked about what is tokenization doing and what kind of access it's creating. I'll give you obviously RealT as an example. When we do an offering, we place multiple thousand of investor per offering in 154 different countries as of today, which gives access, not only access to more investors joining a deal that they didn't have the opportunity to join before, but it gives liquidity. Today, you could buy a token in RealT, collect your rent Monday, Tuesday, Wednesday, Thursday, sell it on Friday with a very dynamic secondary market. On top of it, you don't want to sell your token. What is real estate without lending? Well, lending is tough today. Interest rate is hard. RealT has the RMM, the RealT money market, where you could deposit your token and take a 50% loan LTV on your token in 2 clicks without encumbering the property. This is giving access to liquidity, transparency, and is giving confidence to investors that real estate is no longer a 7 to 10 years investment, and you no longer need the big ticket. You could invest with $50. And We did it with over 17,000 active investors today, with a very dynamic secondary market, very dynamic lending platform, and primary market. Liquidity, transparency is key to our industry.
Right. Right, definitely. Can you see? Do you think that this is the right time and place for this, though? I mean, things have. We've kind of had a rough market in a lot of ways. We've got a lot of forces sort of beyond our control working on the economy right now. Is this a matter of technology solving a problem that technology solving a problem in a new way? Or are we kind of launching this as a capability into what might sort of be a rough market, Remy?
There is always a rough market at some point. Yes, rougher situation, but in real estate, you buy when there is blood on the street, even if the blood is your own. And that's a rule of thumb when you do acquisitions. So it's going to happen. It's going to go back up. It's going to get stronger. People need a roof. People need real assets. So yes, it's not ideal. No, it's not terrible. Yes, we'll get through it. And yes, the technology is changing everything on the field of how people can invest, can interact with their investment, and can decide to hold them. Non-custody, you're the master of your own destiny with your private keys.
Mm-hmm. Mm-hmm.
I think, Justin, also, I think that you have to look at, you say timing. I think the timing is really perfect for the real estate tokenization market right now, because when you look at it from the standpoint of a sponsor, sponsors have a rough time right now generating capital. The lenders have pulled back. Private equity is now, or private lending is very huge, and the interest rates are approaching 14%. So the market has changed. The world has changed in terms of real estate, and sponsors need another option because the current options that they know about are closing, and therefore they're stuck. There's about $1.6 trillion worth of mortgages coming due over the next 24 months. And the gap between the value of the assets that they financed maybe 4 or 5 years ago and the value of the asset today, and the appetite in terms of loan to value or loan to cost from the lender, that's also compressed quite a bit. So if somebody has to fill that gap, it's not going to be institutional vendor or lenders. It's going to be difficult from private lenders because they're going to see this as an enormous opportunity to discount the price point. But I think going out to the retail investors who could be digital investors buying in, trading their cryptocurrency, or even just deciding to use a wire transfer to buy these assets, is a great opportunity for sponsors to find new sources of capital.
I'd like to add.
Go ahead. Let's let Matt jump in. Yeah, go ahead, Matt. Go ahead.
Great opportunity here for sponsors, but then also investors. I mean, one of the reasons I started ABC was because I worked for a developer for 7 years and was never once offered the opportunity to invest alongside of him. And so even though I had that connection with the developer, it still felt very exclusive to me. I was also a broker at a national brokerage, and I was finding great opportunities, but I would just broker the transaction. I didn't get to invest. And now I think even with my network of commercial real estate professionals and access to this, it was still difficult for me. I bet the average person or retail investor knows that there'll be opportunities to buy in the dip right now. We see interest rates have risen. Cap rates have risen, property values are coming down, and retail investors should want, I think, some exposure in their investment portfolio to commercial real estate. And I think tokenization and lowering that capital minimum investment and being able to even have multiple investments in multiple commercial real estate properties to be somewhat diversified makes a lot of sense for the average investor right now.
So say you are a retail investor who's determined the amount that they can invest at this point, you peel off, 10 or 20K, you want to try and put your toe in the water. Where is the place to start here, Matt? How do people get on board? I mean, because I'm assuming that's the plurality of our audience listening right now. Go ahead. Sorry.
Well, I'm a bit biased. I'll say ABC, but I think there's a lot of great opportunities. The guys on this panel right here, I think you should check out their companies as well and what they're doing. Okay. Our company has an advisory board with over 300 years of experience in commercial real estate and $6.5 billion of transactions executed. We formed this team to be able to source, quality commercial real estate investments, to be able to underwrite them and offer fractional ownership to investors. And I think in order for mass adoption to occur, we'll probably get away from talking about blockchain eventually, or even the word token. And people are going to be interacting with these investments and going to a RedSwan or going to a RealT or an ABC and investing in tokenized commercial real estate or residential real estate without even knowing that blockchain really is operating in the background.
Yeah. You make a great point. I mean, first of all, Sam made a great point, honestly. Calling it crypto in the first place never struck me as really good advertising for the overall space. Like, if you look at the root of what that word means, I like digital assets personally. But, Ed, in order for us to work out this new world of highly, volatile digital assets, essentially what we're talking about here, although tethered to real estate strikes me as less volatile than a lot of other classes out there. How are we going to navigate and where do we stand right now from a regulatory point of view? Because don't we need to wait for Gary Gensler to work out how he feels about tokenization in general before this can really be viewed as a solid investment by real money out there?
Well, I'm glad you said that, because I think there's always this confusion out there in the marketplace that the SEC is against digital securities. And that's not the case. The SEC ruled in 2018 that STOs were legal ways to raise capital. And that's when we jumped in business, because we saw this as an opportunity. So I think the question is, are you compliant with the process of selling these digital securities, or are you non-compliant? We started in 2018. The first thing we did was go after our licenses with the SEC to make sure that we are compliant. So I think as long as you're providing a quality service to your client in a compliant way, then there's no problem. There is no issues with regards to the SEC. They want you to do it correctly. And I think the problem is that many people confuse it with cryptocurrency, which is not regulated by the SEC. And so for their different issues with regards to crypto, but as Sam very clearly said, this is not crypto. This is digital securities, just like stocks securities you're seeing on NASDAQ or New York Stock Exchange. So it's just in a digital form. And as Matt said, pretty soon we're not going to be talking about tokenization. We're just talking about buying assets. We're buying securities of real estate shares so that people can have that same ownership interest in a property that the major investors have. So you'll be buying right alongside of major institutions that are buying real estate, but you just have a pro rata share of ownership, which I think is pretty exciting for U.S. investors, but also for foreign investors. You think about emerging countries that have a lot of problems with interest rates, hyperinflation. They can't keep their money in the bank because it keeps losing value. If they can now buy some digital real estate that's paying them a dollar denominated return of whatever, 8%, 9%, you name it, that's a whole lot better way for them to hedge against inflation and build wealth than the current situation they have right now.
If I could, Justin, if I could just add add a little bit to that, and then I want to go back to Matt's comment. But it's, if we all sit here and say that we're going to wait until Gensler does something, then it's going to be another 4 years of Ed and I flying around the world, educating everyone on a process, on an industry that's just never going to go, right? Mm-hmm. So I believe wholeheartedly, and so does everyone, well, I don't want to speak for everyone, but regulation is imperative. So it's an ends to the means, right? The only way this is going to be done right is by regulation. Now, is it a pain? Absolutely. But it's the only way to make sure that everyone is doing this the right way, because that one person that does it the wrong way is going to ruin it and stop all of the momentum that has been created by numerous people in the ecosystem over the last few months. That's first. Second, blockchain is, in my mind, is not an option. It's a requirement. And the reason for that is the only way that we can avoid a situation like FTX or a situation like any Ponzi scheme, because let's be honest, a lot of people in this world that are putting their money places are very scared where they're putting that money and is it going to happen to me? And so because of the way that blockchain shows you that audit trail. I hope that we never go away from blockchain. I hope we stop talking about it, because when you say blockchain, people hear crypto, even though they're not related, a little related, but not the same thing. And so it's an easier way for the ecosystem to grow if we stop using words like tokenization and blockchain. But the fact of the matter is that's the only way that we're going to make sure that this is done the right way. So kind of that double-edged sword.
See, I see it completely opposite, but completely opposite. I think the world is going to get educated much more into blockchain, much more into token. Composability of the token is a very important part of the proposition that we offer. I think that the wallet and the seed is a problem for the newbies in general, but abstract account that Vitalik announced a few months ago is solving this. With your email, you're going to be able to control your wallet. Now, the SEC has a set of rules that we have to play by. But the great news is the set of rules of the SEC is much, much more softer than most other jurisdictions in the world. They're not trying to hurt us. They're just wanting to make sure the consumer is protected. We have to play into the rules. But blockchain, we're going to hear more about it. We're going to hear more people saying, we want tokens more than shares. We want to have self-custody of our goods. We don't want to have to wait for 9 a.m. for our broker to open and pick up the phone. I want to go on my phone on my computer at 4 a.m. and do my transactions. I want to put my tokens in there. I want to take a loan. I want to sell them. I want to be in charge of my destiny.
And you do agree with me. You just said it differently.
I think token is going to be the word, and blockchain is going to be here. Now, let's not take something into consideration. Which blockchain is going to become irrelevant very soon? Today, you have Polygon, you have Gnosis, you have Ethereum. Like in 1997, you used to know where your servers were and which data farm you had your servers. Blockchains are going to be the same. You're not going to know in which blockchain you are, but you're going to know you're using blockchain. You're going to know you're using a token, and you're going to know you're using a cryptographic technology, blockchain technology.
Mm-hmm. You know, Matt, when I look at some other parts of the financial services industry operating in Web3 or operating on blockchain, I'm thinking particularly of like personal small business loans. At one point, I've seen a couple of banks, or I've written a couple of stories this year, where they kind of got around the regulatory thing. Well, I should say, or they complied. I mean, really, they didn't really get around it. They complied by absorbing or partnering with a traditional bank that was already licensed to lend. Are we going to see more of those examples? Because I've kind of been waiting for that to become more of a thing. We've got traditional finance, working hand in hand with blockchain-based finance digital assets.
Yeah, it's going to be a trend. Of course, it has to. You're going to see people with a traditional banking license, with brokerage license, insurance license going towards tokenization, just because of the ease of transaction and the cost saving that there will be per transaction. Just that is an incentive enough for this to happen.
And the time savings.
Right. I'm going to take this to Matt. Matt, what do you think is the next big opportunity? Like I said, I feel like we've been cooking on this one for a minute, because I've been hearing, I think the first project I worked with that was doing this was in like 2016, so it's been on the precipice of going to happen for a long time now. And obviously it has happened more now. There people have been transacting with selling real estate and so forth. But where do you think the next big opportunity really is? Where do you see this growing into over the next few years?
The opportunity in terms of commercial real estate investments, which is really that's the foundation here, right? The underlying investment, regardless that it's in the form of a digital token, it's really the real estate. So I think distressed office and retail properties here nationally, I think there's a lot of potential. Personally, I think maybe Class A multifamily is going to be a strong asset class. Industrial logistics, I think will stay strong, and I think it always depends geographic location too, right? I think the northern half of the country versus the southern half of the country, or east versus west. Once you get into the details, it's going to depend.
And it feels like we've talked about the U.S. market, quite a bit, and obviously I'll tend to skew toward talking about it since I know it a little bit better. But I can't imagine that that's necessarily where the best opportunities are necessarily on the buyer side or the seller side. And there have been other nations that have embraced blockchain more openly than the U.S. has, which has shown some misgivings about it, or at least we've certainly had a lot of regulatory back and forth about it. So where do we see, geographically the greatest growth starting? Ed, do you see, are there any areas that excite you? Take a Singapore or something like that, which has kind of done a hard turn from being, very against blockchain to trying to be more open.
First of all, I think that your question about opportunity is that all assets, all real estate assets, in my mind, are going to be transitioning to the blockchain. So therefore, opportunity for service providers to get involved in that process, that transition, is a huge opportunity. And getting ahead of the game before everyone else is where you're going to really get the benefit of that. We're seeing a lot of opportunity here in the United States. Of course, sponsors are calling in. We're tokenizing a lot of assets. We've already tokenized about $5 billion worth of assets. Another $3.5 billion just came into our laps 2 weeks ago, and that's overseas. I think that there's markets we like. We like the whole continent of Africa. We like the GCC. We like the United States. We like Canada. These are all, and we like Vietnam. These are all markets that contacted us and are interested in tokenizing assets. And we've had calls from France and other places around the world, but we have to kind of pick our areas where we have some level of knowledge and education. So I see a huge opportunity as all real estate transitions. The question is, who's going to take it seriously and get involved with it? And one thing RedSwan has done is really made a business out of transitioning these assets onto the chain, putting it on the marketplace so the investors can actually take a look at what assets they want to buy and actually start transacting to buy these securities. So the opportunity is happening today, and we're excited about it. And I think it's going to continue for the next, forever, because once you go digital, I don't see you unwinding, going back to an analog state.
Right. That makes sense. Yeah. I mean, Sam, at this point, it's kind of a necessity, isn't it? I mean, I don't know. You give it 10 years, 20 years. I grew up, my father was a real estate lawyer, essentially. So he did lots of closings, title insurance, that sort of thing. So I kind of grew up around it. But I must say, it's a pretty antiquated system in many ways, much using of fax machines, much mimeographing. I mean, it might be a slight exaggeration, but not much of an exaggeration. Go ahead. Yeah.
I also moonlight as a real estate developer, owner, operator. I have built my company over the last 20 years, Fairchild Acquisitions. First of all, just the opportunity. I look at multifamily housing as a bond for life. It just is, right? Unless you buy bad in a bad neighborhood or significant economic changes happen to a neighborhood, you're going to do fine over a long period of time. Having an asset tokenized, like Remy said, just allows you to drive the possible liquidity event when you're ready. Versus waiting for the 5-7 year, disposition and capital event. I think the biggest opportunity in this world right now is actually debt. I've refied and bought a lot of assets over the last 6 months. And, it's funny because it's sort of an oxymoron, because the real estate industry is the backbone of the world's economy. Has always been, will always be, right? Just a fact. But it is the most inefficient industry in the world. Sure. So digital transformation is bringing efficiency to the most inefficient industry there is, but also the biggest industry there is, right? I think the last number I saw was something like 9.3 trillion in alternative investments across the world, right? So of which a big percentage is real estate. So I think the ideal play, and I've been saying it for 2 years on a lot of panels all over the country, is that a blended cap stack, a multiple token offering where you can not only have a piece of the debt, but you can have a piece of the prep and you can have a piece of the mezz, and you get a blended rate of return in the 7 to 9%. You're solving a lot of problems. The biggest problem today is not lack of supply, and it's definitely not lack of demand, because everyone wants to buy. The problem is that banks have taken the LTVs from 75, 80 even, down to 55 or 60. The DCRs have gone from 115 to 130, and the cost has gone from 4 to 7. So I'm not saying let's provide cheaper money and let's make riskier loans. What I'm saying is let's use the digital platforms that have been created to allow financing to be more efficient, investing to be more efficient, and operators to do deals for transactions to happen better, faster, in a more efficient way.
And to add to what Sam said, we believe that a token needs to have a life on its own. The real estate asset itself, or whichever asset for a fact, is not going to move once it's tokenized. The tokens will be moving. The asset will stay in place. So tokenizing asset is great. But if you tokenize an asset and the asset doesn't move, it has no real value. You could put 25 billion on the platform. You need to give a token a life to this token. How do you give life? You bring the demand for those tokens. You bring the lending. You bring the secondary market. You bring the liquidity. This is where the big transformation is. And each token, each asset has to live on its own as a total separate offering. That's the way we see it. And what do I mean by this is, like Sam said, you have access to the liquidity whenever you want. The asset, you don't need to wait for 50 owners to say, oh, we want to sell. And then they all sign. Here you have 5,000 owners or 2,000 owners on a property, and you want to sell your own asset, you're free to do it without impacting anybody else. Those are some of the major change we're going to see.
Yeah,
go ahead.
Yeah, I just think, just to talk on that, I think this basically what I do when we take on projects is really to spend time with the sponsor to understand what their needs are, because managing your capital stack and building your capital stack is very important to a sponsor to make sure they have the right amount of debt, the right amount of equity, as Sam said. And so I think tokenization can play a very important part of that, whether you're tokenizing equity for the project or you're tokenizing the debt on the project, but it allows for optionality for both the sponsor as well as investors coming through the door. And I think you look at family offices who just have an option to buy into an asset. They don't have the ability to sell that asset when they need to sell and get out. They always have to wait for the sponsor to sell the property. And as a broker for 20 years, that could be a 9-month process. Well, if COVID's hitting in 2020 and you're trying to exit out of hospitality, waiting 9 months, you waited too long. Having digital assets and be able to turn the corner and sell at the demand of the market. So you might take a haircut, you may not, but at least you have that optionality. And I also want to point out the fact that we go to IRA events, we go to broker-dealer events, many of them, 80% don't know what digital assets are right now. They're learning. And we're showing them that, look, you're offering these analog securities to your investors. If you gave them the option to say, you can buy this for $50,000 shares in this particular development project, and it's analog, and basically you're going to hold it until the sponsor has that liquidity event, or you can buy the same digitized version for $50,000, and it gives you the option for liquidity. I would say 9 times out of 10, even if they don't know what it is, they're going to take the option that gives them that liquidity. So it's just a matter of educating the market as to what the advantages are of digital securities. And once you explain it, I think people become hooked and sold. That's the kind of success we're having on bringing a lot of deals on chain.
And the access to the underlying assets, data and documentation that goes with it, right? I mean, in today's world, people want the access to financials when they want to see them. They want to be able to log in and see, okay, this is how they're performing. The rents are up, the rents are down. Here's what collections are. Because of blockchain, because of how you can push data into the token itself, into the owner's portal, they have that access. And, so the institutional investor that's making billion-dollar allocations into REITs, they may get decent information, but not the information that we're talking about here. This is real-time valuation. This is real-time data in a real asset that you can touch, feel, and go see if you want to.
Right.
And
sure.
Only thing I want to add to Sam
let me go over.
I don't want to log into a centralized platform. I want to go on chain and be able to look at it without relying on a third party to be able to see my asset. If it's not on chain, I don't trust it.
But let me take that question over to Matt. Because I'm wondering about this. I mean, I know in a nutshell, just from having been around the industry long enough, if there's any single reason why the real estate industry becomes so Byzantine in terms of its regulation, its processes, and its forms and so forth, is because there's a lot of it is very much not decentralized. You have a system of gatekeepers that have to approve at various points over and over and over again. That's how you get up with a lot of faxed forms and having to overnight for signatures and that sort of thing. And now they're doing e-sign and so forth. But that's where it becomes so Byzantine and complicated. But at the same time, there is a reason for centralization. People tend to want to deal with individuals that they trust. That's how that's how things have happened up till now. Can that dynamic be replaced with a DAO, for example? Can it be replaced with a sufficiently talented enough smart contract, or with a voting system with investors behind the scenes? We certainly have the capabilities, but will the industry accept it? Will that ultimately be better, in a more decentralized form than what we've had up till now?
I would say absolutely. I think with time, more and more people will understand the difference between an unregulated cryptocurrency and digital asset security. I think historic performance of a specific token that's tied to a specific property will be proven. People will start to trust the data that's on the blockchain, and like Sam said, being able to, and Remy, being able to access that at any time, 24/7, will be huge. I like the efficiencies created with smart contracts and, let's say, distributions in the form of a stable coin. One thing I like to think about is, if there's no question whether if you hold that token in your wallet, you're the one getting the distribution, right? And if I send that token to you, well, now you're the one getting the distribution. I don't think you need intermediaries at that point to look over lengthy legal contracts and go this back and forth and to take weeks at a time in order to do that transaction. And then if let's say you move, or your bank account information changes, or your mailing address changes, that doesn't matter, because your digital wallet is your digital wallet. I don't need to contact the sponsor, the person who sends the distributions to, maybe it's hundreds or maybe it's thousands of investors. That sponsor, with the click of a button, can shoot out that distribution to all of the token holders directly to their digital wallet. And so it's just going to take time. But I think that's why we do these panel discussions and educate others on the benefits of blockchain and why this all makes sense.
Mm-hmm. You think it's going to lead more people into investing in this space, Matt?
Will what lead more? Will what lead more people?
The availability, the fact that there's more flexibility in terms of getting in and out. You can get in at a lower threshold. It seems like there's less resistance to investing in commercial real estate than there once was. It's the kind of thing that you would imagine you'd have to be in a certain tax bracket in order to be able to do. Maybe now not quite so much.
Absolutely. I also, again, with time, right? Because when we always say, when is this going to take off, right? A lot of us have been in this for a number of years. The industry has grown, but it hasn't grown as quickly as we had hoped. But also, if you think about when we're selling tokens right now through an offering called a Reg D 506C, which we verify the investor's identity. We verify that we have a third party verify that they're accredited. And the ownership shares are non-transferable for a year. So I think there's a lot of people right now. I think RedSwan, I can't speak to RealT, but I know others who are tokenizing commercial real estate investments. And because those shares aren't transferable for a year, there is no liquidity because of regulation. And so in 2024, those that are tokenizing now, you might see some liquidity begin a year from now because, again, due to regulation, they're non-transferable anyway for 12 months.
Mm-hmm.
We focus on Reg S.
Right.
Oh, well, there you go. And I think with the Reg A plus tier 2, you can raise up to 75 million, and those are available to non-accredited investors and accredited alike, and are, I believe, tradable from day one. So that's the route to go.
Right. I mean, of course, guys, there's a really high profile trial going on this week that it almost seems like an omission to not mention some way or another. I think, all of our relatives, if they know nothing about blockchain, might know the words blockchain, Bitcoin, and Sam Bankman-Fried. So, how do we, we're trying our hardest, right, to come at this from a point of view that should be miles away, should be universes away from what went on there. How do you explain that, Ed? Because I bet you've been asked. I mean, if your family's like mine, people probably asked you about it. They kind of lump it all together like it's all one thing, like digital assets are all one thing. How do you make that differentiation for the layman?
Well, first of all, you have to let them know that there's a difference between digital asset securities and cryptocurrency digital assets.
Right.
A cryptocurrency digital asset could be in your wallet, and if your wallet is stolen or you lose your address, that money is gone. A digital asset security that's in your digital wallet is on an address, and so it's whitelisted. So if you lose your keys to your wallet, it can be burned and replaced. So it's just like a stock certificate. So I think once people understand that what we're bringing to the marketplace is like a stock that's registered with the SEC and compliant, that will change the mindset, because crypto has been out there such a long time and people have been kind of unfortunately burned by some crypto. But now when they realize there's another product out there, there's safer, much more regulated, and also there's a much more variety of options, I think they'll start moving in that direction. I mean, the problem with digital securities is that there's really not a whole lot of product on chain. So on the other hand, cryptocurrency has thousands of cryptocurrencies on the marketplace. So if you're really trying to get involved in digital assets, I think our job, all of us here, even Remy, is to put more assets on chain to make more optionality available to retail investors, to institutional investors, family office investors. The more you see optionality, the more you will be interested in buying this type of product.
I think that Justin, if I can jump in, I think the difference is night and day, right? I mean, if you're trading cryptocurrency on Coinbase on a daily basis, how much due diligence are you doing, A, and how much information are you being given, B, and C, what is the underlying value? What is creating that value? What is it tied to? We're talking about digitalizing the ownership of a real physical asset that comes with it documentation and books, real accounting, and an audit trail. So what did everyone do wrong with FTS? I don't think we have enough time on this panel to get into all of it, but very simply, there were no books,
right?
There were no books. There was no regulation. There was no due diligence done, period. So again, you want another great example, Silicon Valley Bank. Had they had information distributed, there probably wouldn't have been a run to pull the deposits out when if you knew what their plan was and the communication and access to that data was available to the investor.
All right. Well, thank you so much, gentlemen. I really appreciate you taking the time to share your thoughts and experiences with me today. It's been great having this discussion with you. Thank you for joining us. We really appreciate it.